Now, before we get into refined products and looking at some of those demand functions, please like, share, subscribe. These are things that help us keep everything free. So please, your support is greatly appreciated. And before we get into the full segment, we'd like to ask you, what are you doing for Thanksgiving? Has your plans changed? Are you going to be driving a little less, maybe driving more? Flying, not flying. We'd like to hear from you. It's just a fun data point to see what is happening, because we're going to talk about a recent Gas Buddy study and just looking at what did they find, and we'd like to see if there's something similar to what we're seeing out there. So unfortunately, we don't have the normal slide. An individual that normally makes the charts is out, so I don't have it, but we can kind of calculate what we're talking about. So typically, we like to look at that 4-week rolling average. Some people like to include propane, other oils. We're just looking at gasoline, distillate, jet, and residual fuel oil. So right now, in the last show, we had an increase of 14.2, 14.3, and now we have that's now down to 13.6. So we're down about 668,000 barrels a day in demand. And again, it's coming back to that lumpiness that we've been talking about, which is keeping that four-week rolling average fairly flat as we go through the remainder of the year. I don't see much to take us. If anything, in my opinion, it'll start to drift lower, but nothing like we saw in the with the first lockdowns. And we're seeing that in Europe, where you're obviously getting a reduction in mobility and you're getting people doing less, but you're not seeing the same type of all stop that we saw in the first lockdown. So that's why we think that the trend will be lower, but it's not going to be something that's going to be an all stop and everything is completely shutting down. It's just going to essentially just put pressure in terms of where we think overall demand is going to be through the remainder of the year. And this is just looking at some of the economic activity at the high frequency level. So this is what we're talking about. When we look at that rollover in general activity, you can see France at the very bottom of that chart. The UK is right there. Italy is moving lower, and then everything else is shifted down in accordance to kind of what's happening in Europe. You can see Norway, you can see all of these different countries really starting to move down. Spain, same thing. The U.S. is starting to roll over, and that's why we always like to talk about kind of what's happening, what's coming, and it's something that we think that we're going to start to see these rollovers, especially on the economic side, but not only just economic, but also just that general mobility, which we'll go through in a bit more detail as we're starting to see those signs of capitulation to the downside. So when we start looking at that, but first we have to talk about distillate, because distillate had another strong draw of 5.2 million barrels. And when we look at what was really driving that draw, you can see it was pretty standard across pads 1, 2, and 3 as we continue to see movement through the system. Again, not only just on the heating oil side, but jet fuel being preserved. The question is now, what is happening with refracking? Are we going to start to see some refracking slow? Because so far it looks like we have seen that slow down, especially with some of the gasoline build. That was a bit of a surprise. And you can see here that production is fairly flat, which when we look at distillate. So again, it's more along the lines of how do we normalize the distillate pool? Because when we look abroad, which is what we'll talk about in segment 3, distillate still remains in a glut. There still remains a lot of it in the market, not only just in Europe, but also in Fujairah, in Singapore, and in other parts of Asia. So these are issues that have to be cleared, which is something that we're going to continue to see this draw down. And it's really also because we're not seeing that kind of export demand, which again, we'll touch on in more detail in segment 3. So when we look at product supplied, we're just back to the top of the range. It's one where we think, again, it's going to move back down to that 30-year average. Again, there's really not much to say which way it's going to go overall. The reason why we think there's going to start to be a slowdown towards that average, trucking has slowed down within our confidence range, which we'll touch on. But again, it's starting to move a little bit lower. people are just going to start doing a little bit less. And that's why we think that there's going to be this overhang on the distillate side. And then, if weather could turn everything, but right now weather remains also a headwind, which is going to kind of keep us capped and again, moving us a little bit lower over the next 2 weeks. So here's just looking at trucking. Again, 95 to 105 is our confidence range. We got to 108, now we're at 98, so we lost 10 points. Again, it's just gonna waffle back and forth. And the reason why we kept saying that, when we look at the kind of the backdrops in terms of rates, you can see some of the rates have started to roll over a little bit. Flatbed, specialized, refrigeration has increased. Now, that shouldn't be all that surprising if you consider what are we preparing for? Well, we're preparing for Thanksgiving. A lot of stuff has to be in a refrigerator that we eat for Thanksgiving. So again, that is something that if you think about it through the normal cycle, we normally do see an increase in rates. The bigger issue when we start looking at demand going forward, you can see here that the load availability is starting to drop a little bit. Truck availability is starting to increase a little bit. Again, it's enough to keep us within that 95 to 105 range. It's just there's not much to say that we're going to see this big drop just because diesel miles continue to be consumed. Trucking remains a preferred means of moving stuff throughout the system. The inventories are starting to really normalize, which is going to be a bigger headwind. Now the question is going to be what happens for not only just obviously Thanksgiving, but what is going to happen for the holiday season, which is something we're going to cover tomorrow in our economy show as we start to look at what does spending look like, how are people shopping, because that's going to also impact the way diesel demand is really going to shake out as we go through the remainder of the year. Now, U.S. rail traffic, we thought there was going to be more of a slowdown this week. And instead, it looks like it's going to be either next week or the week after because the numbers came in very strong, especially on the intermodal side. So just breaking down the figures here. When we look at total carloads, they're still down about 3%. But again, it's really driven based on things that we were talking about last week, which is obviously coal, because obviously coal has a lot of enemies on a lot of different sides, unfortunately, or fortunately, depending on your view on the environmental capacity. The bigger component that we've been we remain are going to be headwinds is again the petroleum, non-metallic, motor vehicle, metallic. Metallic had a little bounce, which is good to see. That could speak to more on the motor vehicle side. Again, sales are starting to slow overall on the car side, which is going to kind of put some weight. The biggest ones remain grains. Forest products, there's a lot of jokes to be made, in terms of Powell making sure he can get as much paper as possible ahead of the print into the end of the year. But in all seriousness now, when we look at grains and farm products, that's really where we're going to see a continuation in strength. Grain specifically is going to continue to flow. We're really at the end of the harvest now, with maybe some final. We're anywhere from 95 to 96% complete. So we'll have a little bit more, but again, we're starting to get to the end of that, which is going to start to weigh on not so much just where we have been. When we look out and we start to look at the bar chart, you can see that grains remain very strong. They'll remain strong. But on a week-over-week level, they'll start to pare back. But on a year-over-year level, they're going to remain very robust. And so that's going to be one of those bright spots. Same thing with farm products. Another thing that's going to be robust. The one that we really got wrong, or at least I should say, at least I got wrong, was intermodal. We were thinking that intermodal was going to start to slow down. Instead, we got another big pickup, which is a positive to see. The question is going to be how much does this continue to pick up through the remainder of the year? Because again, it comes down to what is happening at the on the Thanksgiving side, what's going to happen on the holiday side with Christmas. That's going to be a big driver. Again, holiday shopping we think is going to be fairly limited. It'll be more e-commerce, fairly limited in terms of just size. There should be on a year-over-year level less purchases, which is going to put some of those headwinds on the intermodal. But again, it's good to see because this is a big a nice consumption of diesel overall. Year to date, we're still down, but again, we're starting to eat away at some of those numbers as intermodal and grains continue to be the kind of those biggest drivers. Now, this is something that we'll talk about a bit more in the report that comes out on Friday. the volume of goods arriving at U.S. ports, as we've been talking about, they continue to shift lower, and this is looking at the 4-week rolling average. And as we've highlighted before, and just to kind of bring that point home again, it really started in 2019. It wasn't so much a 2020 event. It was a 2019 event with the slowdown overall in terms of total imports coming into U.S. ports. That big spike right after that, right in May, that's when we had to bring in more imports to rejuvenate our inventories, because inventories went to I mean, if you went to the store during that period, you know what inventories look like. So now you had the big spike, and now the drift lower is continuing, and now we're going to kind of waffle between this 10 and call it, let's call it 10 to 10.5 as we go through the remainder of the year. So the high frequency data shows a deepening drop in trade. Again, something that we've continued to talk about in the economy show in terms of trade just slowing down. The volume of goods were arriving at U.S. ports in the 4 weeks through November 5th is down 10.5% from January levels. Again, it's something that we don't think it's going to go lower. We think it's just going to go sideways at this point, especially as we go through the holiday season and we start to see some components coming in. But as the dollar remains, I don't want to say depressed. I'm just going to say trapped in this range. That it just means that we can buy less, depending on how the reciprocal currency is doing. And then that just means that, again, there's just going to be less movement coming into the U.S. just because our dollars don't go as far. So now shifting a bit into gasoline. So here you can see that we had a pretty big build of about 2.6 million barrels. It was pretty consistent across the board, especially in terms of Pad 1 on an RBOB side. Pad 3 was more of that kind of rejuvenation that we were talking about. Pad 5 was fairly flat. The Pad 5 builds we think are going to get a little bit bigger as there's additional pressure in terms of movements. But when we look at overall storage, you can see that on a seasonally adjusted level, we're at all-time highs on that top of that 30-year chart. The trend in just looking at the cloud in general, you can see the trend typically shifts up. So it's not like we're not doing what we're supposed to do at this period of time. It's just a question of at what level are we doing it, and that's always the biggest problem. Like OECD, storage started to drop, but it was dropping at the same rate the average was, and we're not coming back within that normal 5-year average. And here's the same thing: is some of those builds are starting a little early. And it's something that we just think is going to increase over the next couple of weeks as we have, again, those lockdowns, those restrictions, people doing less, Thanksgiving starting to disappointing a bit. And just when we look at imports. So this was the last real big import from what we've been talking about when we were saying that we were going to have those big imports coming from Europe over the last, and we said the first 2 weeks of November. This was the kind of the last surge. Now, we will get another increase in imports just because the ARB opened back up, and we will see another increase. So some gasoline that was designated for West Africa made a shift. It actually hit into the Caribbean, and we're going to start to see additional flows. And again, it just comes down to timing. These will start to appear in December, just given on when they were actually bought and sold, and then how will they come over into the U.S. So in the near term, imports will start to fall, but again, those are going to start to pick back up just based on the tanker tracking data. Now, when we look at just the backdrop of gasoline demand, as we said, it was going to fall back to those lows. This is something where we keep talking about, what do we think is going to happen over time? And as we go through the remainder of the year, we just think that we're going to have lower highs and lower lows, and the trend is just going to be down and to the right. Now, again, it's not going to be that precipitous drop that we saw in March. It's just going to be more of a slow kind of rollover as we trend down into the end of the year. Just as people do less for Thanksgiving, people maybe do less for the holidays, and then you're just going to have some of those pressures really starting to mount. Now, when we talk about that, well, let's see it in data. Well, what is the high frequency data telling us? You can see that on the 7-day moving average, we're starting to see things roll over a little bit. Retail, transit stations, again, transit stations coming back to, again, those increasing cases, people staying away from the office. Parks is more of a function of just it's getting cold out, so people are just going to the parks less. And just general activity at the grocer retail is just starting to shift down. Again, it's not something like we saw in the beginning of February, as obviously we never really recovered back to those normals. But again, it's just that gradual rollover in activity that we're starting to see. This is just looking at just kind of merging it all together and giving you some kind of indication as to where we sit at the moment. And here you can see how that rollover starting. We're coming back to the lows that we saw in May and June. Now, our view is that this is going to continue to shift down. Again, seasonally adjusted, it'll bounce up a little bit just because people will do more for Thanksgiving. It'll be less than last year, but it'll still be more than the week before. So that's why we think that it'll kind of hang around at this level, and then once Thanksgiving passes, then we think that it'll start to continue to trend down as we go into the end of the year. Now, looking at that on an Apple mobility level, again, Italy is down 41%, UK down 22%, Germany down 14%, again, kind of continuously shifting down. The US is still at +2, but you can see that the trend is still shifting to the downside, which again is putting more and more pressure on just general gasoline consumption. Descartes, looking at mobility data, they were down 2% last week. And again, that pressure continues to mount. Just before we get into the Gas Buddy data, they had a great survey looking at what is expected. So 45% fewer drivers this Thanksgiving. So 46% of American travel plans impacted by COVID, more than 2/3 of those impacted are staying home. So again, comes down to just people traveling less, just less miles, less gasoline consumption, people just not doing as much, which is going to impact, obviously, not only this week, but also next week in terms of where is that gasoline consumption going to come from. Now, when we look at just on the aggregate and we go across the G20 cities, the U.S. is trending in the wrong direction. But again, we're really not seeing the same type of rollover that we saw in May down to those levels. We think we do get to those May, early June levels of that 50, let's call it, 42 to 50 for the most part. Right now we're at about 38, so we think there's still more downside. China's been fairly flat. That's something that we think is going to be fairly consistent. Japan is still down about -20. Based on some of the information, it's a little conflicting. There's commentary that Tokyo is going to see a problem, but then there's commentary that they're not. So again, it's just going to be it's something to watch. India is going to be an interesting one because you can see India still is down at about -42. And this is coming with the end of Diwali, the end of some of the festival season. So November is going to be an interesting one into December, especially as, let's look 2 weeks out after Diwali. Let's look at 2 weeks out after the end of the festival season. Are we going to see a resurgence in cases? It's going to be something interesting to watch as we go forward, because right now the case count in India has stopped going down, and it hasn't started to go up either. The question is, are we going to start to see a shift up as we ended the festival season? The UK, again, the pressure remains there. Italy, same thing. So you can see the trend is kind of continuing down. Looking at the G20 gross, the aggregate, you can see that the trend is moving further down. Again, something that we think will get closer to that -30. Probably lose another 4 to 6 points over the next couple weeks. Now, just looking at the U.S., weekly gasoline demand, according to Gas Buddy, was down 1.87%. Again, Descartes was down 2%. The DOT was down 3%. It's just going to come down to the pressure, again, remains to the downside. So Wednesday gasoline demand was up 2.6% from the prior Wednesday. Tuesday, which was obviously the election, we saw that shift down. So for the first 4 days, again, it's just going to come down to just where the pressure resides. So right now, where do we sit in terms of where we have been in the past? We're now back to the previous week. So this previous week is now to the lowest level that we've seen since September 20th. Again, the trend is kind of to that downside, and just when we look at week over week, next week we will obviously get a bump just because it's Thanksgiving. So when we're looking at that, you have to kind of roll that into it. We will get a bump week over week, Thanksgiving. Then what is going to happen going forward, and then how much does that drop off? Like, we should see a bigger pump. How big is that pump, and then how much do we have that walk back, and then what do we have with some of those new restrictions? So when we look at mobility trackers overall, this is just looking at Europe in general, and you're seeing that acceleration to the downside. Italy started to kind of pair off. Again, it's something where we think we're going to sit in this level of that kind of -30, -40%, and that's going to be the pressure over the next couple of weeks, where we won't go too much lower. It's just we won't really go that much higher. We're just going to go sideways, which is going to be an overarching issue. This is just looking at the U.S. Nationwide. Clearly, obviously, tests continue to go up. As tests go up, you're testing more. I don't know if anyone has seen what their testing centers look like. I know the ones by us, everyone's looking to get tested ahead of Thanksgiving, so we have lines around the corner. So daily tests equals more cases, but the bigger issue as we go forward is going to be those currently hospitalized, as we've taken out the previous highs in April and then the one that we had at the beginning or towards the end of summer. That's going to be the one to watch when we start considering what is happening with lockdowns. Deaths are accelerating, but again, we don't think they're going to hit those April highs just because we learned more about it, how to treat it. We're taking care of those who are more exposed, or at least at more at risk, or high risk individuals, or taking the precautions. Unfortunately, the deaths are now trending above where they were at the end of August or at the beginning of August. So this is, again, those last two are going to be something to watch as we consider lockdowns and other government type restrictions. So when we start looking at fuel demand, when we first looking at builds, there was a small build of 170,000 barrels. Again, not much one way or the other. We're still down year over year, 5-year average. But as we were talking about last week, we were expecting a big drop down in activity just because all of the stuff moved into where it was going to go. And we continue to see a reduction in just total airline traffic. And that's why, again, it's just we're going to trend to the downside now that a lot of this stuff has been brought to the facilities. We'll get a little bit of a pop just because people are going to consume it next week, as the airlines have been saying that they, instead of seeing a 2 to 3 day increase in flights, it's more of an 8-day where people are expanding. And it's really because colleges are off. A lot of schools are going remote for the remainder month and a half, just to kind of get people away from some of the risks overall in terms of where that data is going forward as we go into the remainder of the year, as we look at driving and just what the driving data looks like and how there's just going to be pressures into demand. But again, we will get more demand next week, which will need to be filled, it's just that spike won't be the same that we saw previously. Now, as we look at passengers, same thing. There's nothing to tell us that we have to move our kind of estimates on an average up. We think it's going to be kind of that 550 to 850, moving into the remainder of the year. When we look at total departures, this is the interesting one because 150 fewer departures on average, again, coming from BNEF. You can see that Europe is pretty much across the board, where as those additional restrictions came in, we saw a reduction in just total activity. And that's something that's going to remain through. China had some small drop downs, but again, it's more seasonal than it is any kind of concern about some of those data points. The U.S. had a little bit of an increase, again, preparing for next week and what's expected in December. So right now, just to kind of put it into context, there's about 150 fewer departures on average each day for the week starting November 10th, as airlines in Europe and China obviously reduced. On average, 1,500 flights per day over December have been cut since last week. So again, reductions into December as people start to look to cut back. But it's less than the 6,000 cut from last week. So we saw the 6,000, then some of it came back. Now we have additional rollbacks as we head into the remainder of the year. Now when we look at OpenTable, as we were saying, lower highs, lower lows, and that this rollover we think is going to just continue, obviously not to the same level, but it's just we're going to get back down to the lows that we saw in January, let's call it June, end of June, just in May into June, just in terms of those lockdowns. The weather keeps people from being outdoors. People can't really go indoors. Minnesota's talked about that they're going to announce restrictions on gyms and dining. And again, those are going to be problems. Then as we go into open table, regional breakdown. So here, the global side, we're down, just looking at kind of where we were obviously we're filming Wednesday. So the 17th is Tuesday, 16th is Monday. You can see that we're starting to see those slowdowns overall, just as we go into December. There's not much to say that it's going to be much different, with something where we think that the global average is going to shift closer to that 50 to 55, down 50 to 55%, especially as just we get more weight overall. And the pressures just continue to mount as, again, there's lockdowns increase in the U.S., and then we continue to see lockdowns and restrictions throughout Europe. MTA, just kind of giving you an idea of where we sit. Not much to say. We're just kind of flattish. There's not much to say one way or the other, that we think this is going to be pretty consistent through the remainder of the year. The new Mta budget talks about cutting about 40% of subway travel. I mean, maybe that's a good thing. Maybe it's a bad thing. I don't know. I've hated the Mta for as long as I've been traveling into the city for the last 20 some odd years, and there's nothing to say that that's going to change. So the pressure is going to remain. There's not much to say one way or the other in terms of cities, as less people are going into the office. So then in the next segment, we're going to go through exports, a little bit global, and kind of give some data points that we think are going to be important as we look out in terms of just crude pricing and what do we expect into the end of the year.